Nick, what's your point of view?
Good afternoon, everybody. I just want to pick up on one point that you mentioned. You can't go to a finance conference anywhere in the world today without somebody talking about M-Pesa. And 10 days ago, I was at the OMFIF conference in Abu Dhabi and had the good fortune to sit next to the governor of the Kenyan Central Bank. And we were talking about M-Pesa, and I asked him what it meant to him. And he said what it meant to him was very simple, that in 2005 in Kenya, of the lower social classes, the D&E social classes, he had around 2 million people of the population in Kenya who had bank accounts. By 2010, that number had risen to 10 million, and they had had to bring in depositor protection legislation for those 10 million people because every single one of those accounts was tied to a deposit account. And I just share that with you because I thought that was one of the most interesting facts about the whole M-Pesa project that's very, very rarely shared around. I've got some slides. I'd like to just give you a little quick background about what we're doing. We're a payments institution, and sometimes when you say that in banking audiences, they all run for the door. Hopefully that won't be the case here. We're also a bit strange because we're principal members of Visa and MasterCard in Europe, both as an acquirer and about to be as an issuer. We are just about to announce, and pre-announce today, our full membership of SWIFT. And as Paul Smee, who's the chairman of the Payments Council, said to me in a phone call about 3 months ago, when they were considering having us as members of the UK Payments Council, he said, Nick, I have to apologise to you. When in 2007 we got rid of APACs and formed the UK Payments Council, we had no idea that an organisation like yours would ever exist. And I said to him, Paul, you're forgiven, because in 2007, if had anybody said to me an organisation like Voice Commerce would have existed, I would have agreed with you that it probably wouldn't. And so change is real. We're focusing on the mobile space, and I want to share with you a little bit of view on that. I apologise if some of this has been touched on this morning, but it's near and dear to our hearts because we think the mobile space, the m-commerce space, delivers the most substantial opportunity for change that retail banking and payments banking has ever had the good fortune to have an opportunity to either seize and embrace or frankly miss the boat over. M-commerce, just to give you a little bit of insight, which you probably know, started in 2000 and has yet to become mainstream, but ironically has a market that is 3 times the size of the e-commerce market space today. There are 5 billion people worldwide with mobile phone connections that can use m-commerce and m-payments, compared to about 1.6 billion users of e-commerce. But for some bizarre reason, given that massive market opportunity, the telcos, and the mobile operators in particular, and the banks, have been unable, for whatever reason, to form an appropriate liaison or alliance over the course of the last 10 years to satisfactorily exploit that market opportunity. And as my colleague on the panel mentioned earlier, security and also of greater concern to me, identity theft issues remain unresolved in the same way as they remain unresolved within the e-commerce market space, where solutions which I shouldn't not, but I do, verified by Visa and MasterCard Secure Code, do not tick the box in relation to resolving those issues. See if I can get this thing to work. We talked to consumers about what they were expecting in this new wonderful world of mobile payments, and it's sometimes interesting to ask your customers what they want. And they said that they're expecting deliverance out of all the great that's coming out of the EU of something called frictionless payments. Well, whether they mean they don't want coins in their pockets to wear their trousers away, or whether they mean something more profound, I guess is open to debate. But what they meant by frictionless payments is that if we as a technology institution or a technology group wanted to make them move away from cash, then the solution that we had to deliver to them had to be as easy as cash. Because there was no point me going into a Starbucks restaurant today to buy a cappuccino and a blueberry muffin if I had to wave my phone, enter a code, wait for authorization, which might work one way in Spain, a different way in France, and an alternative way in Europe. They also wanted simple and appropriate security. I think post the credit crunch, there has been massive concerns about the integrity of the global financial system, which all of us have experienced, in different ways, and, whether we admit now to being bankers or deny that fact, unless we're amongst close friends, is a debate. But just issuing a PIN to somebody and believing that saves them from the world doesn't actually work. And as I go back, frictionless payments has to mean the ease of use is as simple as cash. And, when we go back and talk about security, if you lose your mobile phone, you will notice you have lost it in about 30 minutes. Whereas if you lose your bank card, it can take up to 3 days. And so probably possession is as much as we probably need in relation to security. Because how much fraud can somebody actually do, or what identity theft can they take against you in a 30-minute window between you having received your last SMS message and realizing that you haven't received one for 30 minutes. And interestingly, in Japan, they've been looking at frictionless payments and all the rest of it for a number of years. The next slide's meant to be a video, but due to security reasons, the video didn't come through the firewall. So apologies for that. All close your eyes and imagine that you're in Shingawa Station in Tokyo this morning, where they have barriers that don't have barriers. They allow people to go through onto the platform, to get onto a train at the rate of 50 people per minute. That's just over a second per person, using contactless payments. The only time the barriers close is if you're out of credit or you're trying to use an instrument that isn't approved. But you basically waive a contactless payment, or you waive your mobile phone and you get onto the train. As with all things great in financial services, this platform is actually run by the East Japan Railway Company, which you might detect from his name has nothing to do with either a telco or a bank. And interestingly, in Japan, the regulators took a view that he didn't, in the first instance, want interoperability amongst mobile payments, resulting in a situation today where you actually have to get additional memory for your smartphone in Japan to add the number of e-wallets that you want for the services that you choose, because Starbucks will work at Starbucks but not at McDonald's, but McDonald's will, and the train ticket's a different story. Security, identity, and all the other things that are important in relation to a new payments technology, and I think that SEPA, PSD, and the Payments Institution are embracing this, bring up and create an opportunity to review KYC, AML, and all of the other issues that face our industry today around security. And what we've been doing is looking at creating systems with a number of different organizations where we can do automated KYC, AML checks on consumers across a 51-country network at the moment, which includes collection from them of a thing called a voice biometric signature. We didn't need McKinsey to do a survey to tell us that most people with a mobile phone could speak, and voice biometrics allows us to identify an individual by making an outbound telephone call to them to authenticate them at a point of transaction, which either they or their financial institution can choose to initiate. The advantage of this is that you double the security because you're splitting the network, and effectively it gives us quite a significant opportunity to create a new account boarding process for the 4 to 5 billion people, which we feel over the course of the next few years, certainly by 2015, 2016, who will have opened a new type of financial account, probably being operated by a payments institution, definitely underneath some of the legislation that's been created within the EU. And I think the opportunity that SEPA, the Payments Institution, et al. Gives to us is the opportunity to fix some of the mistakes of the past and build a far more secure and a far more responsible payments infrastructure for the future going forward, which will revolve around mobility.